Hello guys, it's Max here from Daily Market Movements. First of all, I would just like to apologize for not posting a video on Friday where I normally conclude the movements of the markets for the week. Unfortunately, I was very busy and I didn't have enough time to post a YouTube video, but do not worry, I'm going to be killing two birds with one stone with this video because I'm going to be covering last week's movements that occurred in the markets and of course analyzing the markets and trying to predict where I believe the markets will go during this week. So we're going to kill two birds with one stone, as I just mentioned, and cover both parts during today's video. So let's start with the gold over the US dollar chart. So gold actually had a bounce on Thursday. On Friday, we actually continued the gains that occurred from Thursday, and we ended the week up at 1760. Now, for those who've been watching my videos for some time, you will know that I am bearish on gold. I think we're heading for this green box here, which is at 1700 towards the 1680 area. Why? Well, the fundamentals aren't looking so great medium to long term for the gold markets. Personally, I believe that within the next couple of months we will have the Fed come out and announce the start of the tapering process as the economies begin to reopen. COVID cases globally are on the downfall, and I think that the Fed at the moment in many countries, I say the Fed, sorry, central banks around the globe in many countries like the UK, for example, are spending too much money on a monthly basis, and it can't continue forever. And of course, we are going to have to unwind from this fiscal and monetary policy that is currently in place. So fundamentally, I do see gold breaking down. I think eventually we break below 1680. I've mentioned that for some time now, but that's more medium to longer term. I'm just going to analyze the markets that are in front of me. So as I mentioned, we're currently at 1760 here in the gold market. We bounced, but that doesn't really worry me. I still have a target down at 1700 to 1680. A bounce is perfectly normal. In fact, you could even draw a little small short-term downtrend that we're in here. We're at the top of that downtrend. If I just do the bottom line as well, there we go. That kind of just marks the downtrend that we're in. So going into Monday, I do expect to see a continuation of a breakdown here in the gold markets. I mentioned previously that we are currently trading within a ABC correction pattern. So here we have the A leg, then the B leg up towards 1830, and we've struggled to break above this B leg on 3 separate occasions. And of course, we had that C leg all the way down at 1680. Now, there's there's two ways that this could potentially plan out. We could potentially go in and test the B leg and break above, and if we broke above that 1830 area, that would be extremely bullish for the gold markets, and it would send it to at least 1900, 1920 from my point of view. Or it looks to me that we're going to go in and try and have a double bottom. Now that would be bearish for the gold markets, and that's where I do anticipate a further breakdown, which will come potentially within a month or 2 months time when the Fed does come out and announce that tapering process. So what am I looking for going into this trading week? Well, I'm looking to see whether this downtrend holds. Personally, I believe it will, but if it doesn't, not to worry, because we have the 23% level on the Fibonacci chart, which I drew from August highs. So that's August 2020, where we achieved that 2067 all-time high for the gold market, where I've dragged it all the way down to the 1680s, where we've triple tapped, and of course marks the bottom of this C leg that we've had in the ABC correction. I think that will act as a short-term roof in the market, and then of course just above there we have the 50 and 200-day EMA, then of course the 1830 area. So we have plenty of barriers to break through on the upside, and the gold markets really have got their work cut out for themselves. So personally, I do prefer the downside, especially now that we're trading below the 50 and the 200-day EMA, and we did form on the daily a bearish crossover with a 50-day EMA piercing below the 200. So going into Monday session, I'm looking for that continuation of a breakdown lower in the gold markets, and of course we will recap on Wednesday to see where the markets are and how they have performed. But I am bearish on gold. That's my opinion. You don't have to copy. Sorry, you don't have to copy my bias here on the gold markets. You're all adults. You all have your own biases. I do advise you all to do your own research, but personally, I will be shorting this market. Let's go and have a look at the Nasdaq100 now. So the Nasdaq100, very tricky situation here. We have the 10-year yield rising. That's why the Nasdaq100 has broken down more than the S&P 500 and the Dow. We had a very negative day on Thursday, and of course on Tuesday when we really broke down here in Nasdaq 100. I think we were down nearly 3% during the day, and then on Friday we were trading in the red, but then the markets bounced back, and we you could argue that we formed a slight hammer candlestick, which could be positive here for the Nasdaq 100. But more importantly, seasonality trading comes into it. We are now in October, which marks the start of Q4. Now, Q4 is typically the most bullish quarter of the year for the stock market. I am very bullish for the tech market. And the majority of the big tech names that trade within the Nasdaq 100 index, and I personally believe that we will trade back above the 50-day EMA in the short term and go and retest those all-time highs. Now, how far are the all-time highs? Well, if I just drag this, we're currently trading 6.47% off the all-time highs. I'm just going to go ahead and leave that there. So we have now had a short correction here of over 5%. Anywhere above 5 to, well, I should say between 5 and 10% is considered to be a correction. It's whether we go and test for 10%. Now, if we were to fall towards a 200-day EMA, that would be a 12.69%. So that would be roughly a 10% correction, which, again, that would be healthy. I do not believe we will go that low. And the answer why is because if you look at the RSI, we are considered to be near the oversold territory. So I see this as a fantastic buying opportunity for the big tech stocks. There's some fantastic value out there right now in some of the biggest tech names out there, and personally, if if I was you, I would be going out there buying. But again, this is my bias. I'm not telling you what to do. I'm just sharing my opinion with you all. It's down to you to go and do your own due diligence. Sorry. Let's go and have a look at the S&P 500. So just to conclude there on the Nasdaq 100, I am bullish and I see this as a fantastic buying opportunity. But let's just pull up the S&P 500. The S&P 500 is slightly different. We're still pretty much trading at that 50-day EMA. We did briefly trade below the downtrend, but the uptrend. But unlike the Nasdaq 100, on Friday we had a very bullish day. S&P 500, with it being the start of the Q4 again, many buyers have come back into the market as September is now finished. We had a rather big decline actually during the month of September. If I just drag it down, so we had a 5.44% correction here in the S&P 500. So I see this as a fantastic buying opportunity. In fact, we've already started to cut back some of our losses here that have occurred in the month of September. So I'm bullish. The only barrier that we have to break above towards the upside is the 50-day EMA, which is at 4,410. But I think that we slice through that like a knife slices through butter, and eventually we go up towards the medium. Eventually we go up towards the all-time high here for the S&P 500, which is all the way up at 4,557. So again, just to conclude here on the S&P 500, my bias is bullish, and I will be going into the market tomorrow on Monday buying this dip. Now, let's bring up the crude oil markets. Very good week here for the crude oil markets last week. We started down near about $74 a barrel. I said to my clients and to my viewers here on YouTube that I think that we will go and tap the full 1% mark here on the Fibonacci retracement, and we got so close. We got to $76.75 a barrel, and then we fell all the way to go and test at that 78% level. We bounced very nicely, and that said to me that we were going to go higher. So I actually sent a buy signal at $74 a barrel to my signal team. They're now trading in profit as we're trading at $75.88 a barrel. I have my take profit up at 77, and I'm very confident that this week we will go and touch $77 a barrel. If you haven't yet got a position open in the crude oil markets, I wouldn't touch it. Why? Well, look at the RSI. We are approaching the overbought territory, and from my estimates, when we do achieve that $77 price target of mine, the RSI will be at 70. So if you've missed this one, don't worry, be patient. There'll be plenty more opportunities. The market's not going anywhere, but very happy. I have two positions here. In fact, for the crude oil, I traded all the way down from $70 a barrel, and I also traded it from $74 a barrel. So very happy with that trade indeed. Going into this week, just to conclude here in the crude oil markets, I'm looking for $77, but I'm very confident that we will achieve that, and then I'm just going to take profit there and then just see where the market settles throughout the week. But last but not least, let's look at the Euro US dollar. Euro US dollar had a complete breakdown here. I am now I closed my buy position that I had in the Euro US dollar And what I'm just waiting for now, I did say that if we do touch that 15,000 level, sorry, that 15,500 level, that you should be a seller here in the Euro US dollar. But one problem I have with opening a short position at this moment in time for the Euro US dollar is that we are now considered to be very oversold here in the Euro US dollar with the RSI down at 29. So I don't really want to open a short position just yet. In fact, I don't really want to I don't really want to be buying here either. What I'm willing to do is to buy if we break back above that 1.1650 area. So if we break back above that 1.1650 area where that black line is there that I've just drawn on your screens, that is an area where I would be willing to buy the Euro US dollar and trade it back up towards that 23% level on the Fibonacci graph that is just above that 1.18, currently at 1.1834. So that's how I am looking to trade the Euro US dollar. Patience. I unfortunately closed my buy position out in a loss as it hit my stop loss, which was down at 1.1625. Not to worry, it was a very tight stop loss, so I didn't really lose too much capital. So that's very important. Of course, part of trading is having a sensible risk management. You don't want to be having wide stop losses. Mine was very tight. I opened it at roughly 1.17 and I had it 100 pips lower down near that 1.16 area. So that is my game plan going into this week. A little bit patience here at the start of the week. It can be a bit slow, the Euro US dollar, but as soon as the Fed begins this tapering process, I really do anticipate for the US dollar to really struggle here for the euro against the euro here. And I've mentioned it several times on previous occasions that I really do prefer the euro over the US dollar medium to long term. So I'm very confident that we will be trading above the 1.17 and we will go and target that 23% level on the fib chart, which is currently above that 1.18 level. And then whether we break above the 50 and 200 day EMA, that is still that's still yet to be told, but I am very confident that we will go towards 1.22 within the next 12 months. So I see this as a great potential buying opportunity. Keep your eyes peeled, buy at 1.1650 if we get there. But if not, sit on the sidelines, and I wouldn't short the market just yet because we are considered to be oversold. So that is it for today's video. Once again, apologies for not posting a video on Friday, but I've kind of wrapped up and concluded the movements that occurred in the markets last week, and I've also kind of given you my my forecast as to where I believe the markets will be trading up until Wednesday, when I will post my midweek video. As always, if you guys would like to receive signals from myself, then please head over to my website, www.dailymarketmovements.com. I've left the link in the description of this video, so if you scroll down, you can click on that link, which will take you to this website. I charge a very small fee of £249 for 8 years membership. And then also, if you're looking for a trading platform, then please do not hesitate to use our trading platform or our trading brokerage. Again, the link is in the description of this video. We have many fantastic features to offer on our trading platform. But that is it for today. Enjoy the rest of your weekend, and I'm very excited for the markets to open later on and to see what fantastic money making opportunities occur this week. So I will see you all on Wednesday. Thank you guys for tuning in.